Hello, it's Adil, Mr. Intermarket Analysis, bringing you a review of the FTSE 100 for Friday's trading, the 4th of April 2014. Apologies for not doing a weekly video. Just been absolutely busy, very busy as of late. Very busy with mentoring, trading, etc. I just need to manage my time better, I think. But just been very busy. Hopefully, I'll try and give you an insight here into Friday's trading. Okay, so basically the summary so far, okay, in terms of fundamentals, we had economic data out obviously on Thursday, which was relatively weak. We started the morning off with Mr. Carney's comments regarding interest rate hike prior to the election. Certainly doesn't rule that out. So that's obviously a hawkish Carney, so obviously that doesn't bode well for the FTSE, hence the reason why I was short biased this morning with regards to the FTSE due to the rate hike phase. Then you had on top of that the economic data that came out worse than expected, so that certainly alleviated some concerns with regards to the rate hike, because obviously we need stronger data to justify a rate hike. But then obviously weaker data equals weaker growth, so again that obviously had a double whammy on the FTSE. So that obviously is that's a fundamental backdrop for Friday. Obviously you talk about rate hikes, so Mr. Carney obviously has got his hawkish hat on. Obviously that doesn't bode well for the currency itself. Certainly argument there for it to appreciate, and obviously that can hurt exports. Adding the fact that you've got a weaker economic data, the data that came out today for the UK wasn't exactly spectacular, so again that raised concerns with regards to growth in the UK and obviously the economic recovery in the UK. So obviously there's two concerns there. With regards to emerging market concerns, we had the MICEX, obviously the Russian index down, although the Turkish index was up on the day. But again, that will come under pressure now, given the fact that obviously that was mainly up due to the fact that you had the Twitter ban being lifted. Okay, with regards to that, so the article, obviously the main one that we can see here, FTSE hit by US data after touching 3-week high. Not just US data, also UK data as well. With regards to that now, the other factor obviously is ECB. Okay, the ECB, given the reports that I've read so far and the reaction to the markets, yes, the euro has gone down slightly, so obviously he's dangled the carrot of QE. So in terms of the European markets, they'll certainly, if you want, provided Mr. Draghi creeps dangling that carrot, then obviously that'll certainly keep the European obviously equities bid from that perspective. So that's something that we'll certainly keep an eye out for. Okay, with regards to that, so that'll keep European equities bid pretty well. But with regards to the rest of the markets, or with regards to the FTSE itself, or with regards to the US markets, obviously they came under pressure. So I'll be discussing that. Okay, but you're certainly US markets under pressure. So so obviously, given the fact that Mr. Draghi didn't come out and explicitly do a rate cut, or he didn't talk about negative rates, he left them as an option. So again, uncertainty really with regards to the euro and with regards to the eurozone, although they'll certainly be trading based on hopium for QE, so that hope, or that bastion of hope, is still there. But obviously that's not boding well for the FTSE. The FTSE obviously won't benefit from the ECB's movement, other than the fact that its European peers are going higher, and it'll probably be lagging that. So from a technical point of view, now that I've given you the backdrop with regards to that, you can just bear that in mind. So US markets obviously did finish at the highs, but Nasdaq was exceptionally weak. The Russell was weak. The Dow itself, if you look at the Dow quickly, and that'll give us generally the Dow, or the Dow Transportation Index. Obviously Dow Transports remain bullish, although oil price has gone higher now, so that'll keep the Dow Transports under pressure. And let's just have a look at the Dow itself. Dow Industrial, so double top resistance, so a doji at double top, so that doesn't bode well for the FTSE going into tomorrow. So again, that confirms my bearish bias. Okay, and also with regards to the S&P as well, if you look at the S&P 500, again it's we put in a high for the morning, and after that we didn't really move higher at all, and one can argue that there's a potential head and shoulders formation forming there, and obviously a reversal south. So this is certainly, obviously, if this is going to be a fake out, then as we know, if it's a fake out, then this is your head and shoulders formation right here. We failed to put in a higher high today, and bang, down we go. Everybody's obviously long the market right now, and they get caught with the pants down. So basically that's basically your long squeeze that we're seeing here. We break through there, and certainly seems to be something that we need to keep an eye out for. Okay, so watch this. It's a breaking, a contracting wedge pattern. Obviously it's broken south, and now we've got H&S formation, and then we break south as well. Now the other clue as well for the US markets will be the Russell. Whenever you had a megaphone or an expanding pattern like this at the top of a market, then it's a negative sign. Okay, it's a bearish signal, so watch out. Okay, watch out below. So given the fact that the ECB hasn't done anything at all to support European equities, even though they are short squeezing higher as we speak, we'll see exactly what happens going into tomorrow. Okay, so that's just a backdrop. So basically overall, euro uncertain, slight tilt or bias towards the upside, which obviously has to be respected. With regards to the US markets, they certainly are into resistance, and they made a lower high today intraday. That's a negative sign. Okay, so there's two signs that we keep an eye out for. Again, can you see the semiconductors? Again, they've been leading the markets, and obviously again they're showing signs of exhaustion, as you can see here. A nice H&S formation, which confirms a H&S formation on the S&P 500 as well. So again, there's two H&S formations. Again, that's giving you confirmation that the US market's under resistance, and we've got an unfilled gap that we need to close below. That's exactly where we're heading. Okay, so that's just a bias from the US markets is bearish. Going into the Asian markets, we'll see exactly what happens there, although the yen pairs do still remain under pressure. And also given the fact that we've got the commodity currencies such as Aussie USD and Kiwi dollar, both have been subdued and under pressure today. So we'll keep an eye out for those two as well. Okay, so let's go back to our FTSE chart, see if we can gauge any movement from here. So from a technical perspective, previous support equals resistance, and we're at the 50 to 61% fib. So therefore, expect a sell-off here. So 6680 to 6660 solid resistance. I don't expect the markets to penetrate that tomorrow, unless obviously the markets go off the Draghi hopium of QE, which I can't see that happening, to be honest, given the fact that the euro did go lower and hasn't really plunged any further. So again, we'll see exactly what happens there. Obviously, we're always open to alternative views, and I'll switch my bias according to the market. But for now, everything looks like a short setup for me, and that's exactly the position that I'll be taking with my subscribers on the live analysis service for tomorrow. So those of you that want to join the live analysis service and gain access to my trades in real time with analysis, commentary, etc., go to my website, inter-market-analysis.com, click on the live analysis service page. It explains exactly how I operate. There's a video there explaining how I operate. If you want the free trial, click on free trial, follow the instructions on there, download WhatsApp, send me an email, send me your mobile number, and I'll add you to a database for a week. Obviously, if you feel that you want to carry on with that, then obviously you can continue with the live analysis service by emailing me. Okay, so that's basically what I'll be doing tomorrow then. So daily chart, obviously there's your argument technically, as you can see, doji candle bearish itself, topping tail, previous support equals resistance, therefore and obviously the thrust higher is obviously into the 50% fibbo, which is holding. Let's have a look at a 60-minute chart. 60-minute chart, rising contracting wedge, we've broken down, bearish continuation pattern, bear flag formation right now. Where do you think we're going? We're going lower. Okay, so no more higher highs. Higher highs have now completed, and we've exhausted now. And as you can see, there's a nice H&S formation. Surprise, surprise, this H&S formation coincides with the H&S formation on the semiconductors and the S&P 500, and it coincides with the double top on the Dow. We've got bearish consolidation, the lower 25%, bearish candle is in control, break of the rising contracting wedge pattern, H&S formation, head is around the 6680, neckline is around the 6640. I'm expecting 6600 tomorrow. Okay, that's basically, I'll just call it right now on this video. Expect 6600 Friday, and we'll see exactly if it hits that or not. Okay, that's basically my projection. Projection more than likely probably lower, to be honest with you. I mean, you're looking at around the 6685 after it triggers a few stops. That's probably the next bastion of support, and we'll see exactly what happens tomorrow. Okay, so anything on the 10-minute chart? I mean, let's just see if we can. I think the 60-minute chart's enough, folks. I think that basically sums it all up. Basically, previous support equals resistance, so watch 6650 solid resistance as well. Obviously, you've got a bear flag formation here, so expect this move to just be thrusted lower. Whether this moves in the overnight session overnight and we'll gap down, then obviously it continues, or whether it gaps up and then we close the gap and continue to move lower. We'll see exactly what happens, but that's basically my bias. You know the fundamentals now. I've explained the fundamentals to you. I've explained the intermarket analysis relationship to you as well. Okay, and that's a wrap, folks. I think I'll call it a day there. I mean, I can look at the FTSE 250s quickly for you as well. Again, FTSE 250, what can you see here? Resistance, doji, bearish engulfing candle, down we go. If you look at a 60-minute chart, see if anything comes up in there. Again, we seem to be lagging here as well. So again, a potential thrust lower as well. So we'll see exactly what happens here after the IHS has been complete now, and we're looking to reverse south. Okay, folks. So risk on, risk off, wax on, wax off. I'll keep this video brief. Goodbye now.